Nigeria's national oil company, NNPCL, has acknowledged significant financial challenges threatening its ability to sustain petrol supply in the country. The company has revealed that it owes suppliers billions of dollars, with reports suggesting it owes suppliers over $6 billion for premium motor spirits. This revelation comes amidst the ongoing fuel shortages and concerns about the government's subsidy policies. And in a related development, the NNPC has announced plans to outsource the operations and maintenance of the Warri Refinery and Petrochemical Company and the Kaduna Refining Petrochemical Company to private companies. But can these private entities deliver the much-needed fuel supply? This morning, we'll be talking to Femi Oladehin, who is the senior partner, Argentil Capital Management Limited, to help us understand this better and give it a proper perspective. Thank you so much, Femi, for joining us.
Morning, and a pleasure to be here as usual.
Of course. Now, looking at the acknowledgement by NNPCL that the company was owing suppliers of PMS in the country, I'm curious to know how that news came to you.
Look, I mean, you know, we've had this conversation several times. We knew, and the market knows, that the NNPC has had this overhang of liabilities that needed to be settled. The reality is that, you know, I was thinking of an analogy this morning. That money doesn't lie, numbers don't lie. If you start a conversation about finances, eventually the accounts have to balance. So even though the NNPC has consistently been telling Nigerians that everything was kosher and everything was fine, the reality is that the balance sheet told a different story. And the balance sheet telling a different story tells us that there are significant liabilities on the NNPC's books that have driven valuations to, they've driven cash flow restrictions to where they are now. What is obvious now is, whether we like it or not, there is significant adjustments that's coming in the horizon. Otherwise, NNPC is going to run out of capacity to be able to run any part of its businesses as a result of this cash overhang or this cash flow overhang that it's dealing with. But yes, the idea that the NNPC was owing billions of dollars to suppliers is not news to us. We always knew that this was the case, even though the NNPC was in denial for some time. But I think what is imminent in Nigeria is, exactly, you know, there was actually a major tweet that came up saying the NNPC wasn't owing money, but the truth is we know that there are significant obligations that are outside of market norms that the NNPC is having to deal with.
This is quite interesting, I must say, Femi, because we were told that the president gave his nod to NNPC's plan to actually pay subsidy with dividends accrued to the federation at some point later. The company declared a 3.3 trillion naira profit, and now NNPC does not have money to even pay the suppliers. What happened to the dividends? Were they actually paid, or maybe not still enough? And how would you even describe the role of the Nigerian government in all of this?
So the story here is this, is that as we all say, if you're an entrepreneur, you know that there's a difference between profitability and cash flows. And the cash flows situation of the NNPC is the biggest contribution to where it is right now. And what is that cash flow situation? The reality is that there are significant liabilities on the NNPC's books that have not been serviced for some time. And it is those liabilities that are crystallizing now. So when we look at a company's balance sheet, it's okay to say, look, yes, I'm profitable. I've got some debtors that need to pay me. I've got some creditors. But what happens is that the auditors will do a sense check of all of those numbers and see whether the balance sheet is strained or not. Now, if you look at the P&L of a company, you can see a company making profits. But on the cash flow side, it might be burning cash at a faster rate than it's making profits. What is happening with the NNPCs? It may be profitable, given all sorts of, derivatives and trading opportunities that it has. But from a cash flow perspective, there is significant strain on the NNPC as a result of its inability to recover the full cost of the product that it had been selling on the behalf of the Nigerian government for some time. Remember when the NNPC came and the CFO said, we are not owing any Nigerian for subsidy payments. It was a clever statement, because he did not say that Nigeria was owing clearly what was traders who brought in products. He was referring specifically to the subsidy payments. That in itself was a half truth, and that is why we're now beginning to see the problems we have with fuel queues, because traders are refusing to discharge products to the NNPC unless outstanding obligations are extinguished. And until that happens, I think Nigerians should be ready for another month of fuel scarcity until the NNPC is able to raise significant liquidity to fix this problem.
And of course, Nigerians were held on for months when the Nigerian government came out to say that, see, I'm not paying subsidies. That was, one shadow that a lot of people could not really bring light to. And now the Nigerian government also say, hey, I'm not paying marketers at all, but then I'm owing some suppliers. Is there even a difference between suppliers and marketers, or is just a battle of nomenclature?
No, well, it's not really a battle of nomenclature. So think about it this way. In the past, what used to happen was that everyone could import petrol. And if there was a shortfall, you claimed that shortfall from the NNPC using a template, which was a triple PRA template. Now, the difference is that nobody else is importing PMS. The NNPC is the only one importing PMS. So effectively, whilst the NNPC was going to pay you as a trader, the differential between the cost of you landing your products in Nigeria and how much you were selling at the pump. Today, because the NNPC is the only importer, it was not owing anybody else but itself. So basically, the NNPC was selling products at a lower cost than it was buying it for. And because of that, it was losing money effectively. Eventually, that money loss crystallized in where we are today, where the size of the obligation is just significantly so big that you cannot use accounting gymnastics to hide it anymore.
So interestingly, even as we bring this into the scope of reality, we realize that the NNPCL is paying subsidy at some point. It does not have enough cash to pay the suppliers right now, and now it cannot have enough fuel to be supplied to the 36 states of the Federation. Now, that's a big challenge for Nigerians and businesses as we speak. What is the implication of this if this continues?
Prices are going up. Long and short of the story is that the NNPC and the Nigerian government have no alternative but for fuel prices to trade closer to its market value, which is around 1,200 naira per liter. It's something that's going to happen either today or it's going to happen in the near future. Now, I know what the Nigerian government has been trying to do was to do something like a guarantee of supply, so that if the refineries were to come back on stream, you can moderate the size of that increase. So, all the story about the NNPC managing director saying that fuel prices were likely to go, the refineries are likely to come back on stream, the expectation that Dangote's refinery will start producing PMS in September in the next month, all of these were towards ensuring that they were not going to run out of products as a result of the financial state of the NNPC.
So now, doesn't this take us back to the points where we were talking about the need for total fuel subsidy removal or the reversal of that particular policy, and even the cost implication of continued subsidy payments on NNPC to Nigerians and the economy? Is that not where we are right now?
Look, if you recall when we had this conversation probably about a year ago, one of the things I said was, look, the president had done the right thing. People are going to come out and say, oh, he was flippant with his statement and all of that. The reality is that the Nigerian state could not afford the quantum of subsidies that we were paying at that time. Now, don't forget that we're not even only paying subsidies today on petrol prices. Energy prices are still being subsidized. So there is a significant subsidy overhang on the Nigerian economy that any government who had won that election last year had no choice but to remove that subsidy. But the problem was that the exchange rate market went into a tailspin almost immediately after, which means that any savings that the government was making on increasing fuel prices was being lost on the altar of the exchange rate. So the truth is that the reason why we are saying that petrol price should be 1,200 today is simply because the exchange rate moved from 600 naira to a dollar to 1,600 naira to a dollar. That's really the real implication of that. So the truth is, right now, we're in a situation where government finances are at its worst probably in a generation. as a result of this continued payment of subsidies. Now, unfortunately, for the average Nigerian, anything that looks like a price increase is a worsening of their current situation from a cost of living perspective. But the truth is, there is no alternative right now to the Nigerian government, except the government was able to cure the problems in the oil and gas sector. We had a significant increase in public finances as a result of, production in the oil and gas industry going to 2 million barrels a day. But anything short of that, we are going to run into this problem until December. And I can guarantee you that that's not what anyone wants at the moment. So Nigerians have to be ready to pay more for petrol.
Okay, so if you say Nigerians will have to pay more, what should be the ideal price now for PMS with all these that you have laid on the table? And coupled with that, you talked about the Dangote refinery, and we know that the Nigerian government is trying to, ensure that that comes up with payments being done in Naira. Do you think that could anyway, be some sort of a cushioning in terms of the price of this commodity?
So look, if Dangote's refinery was working and the NNPC refineries were working, there is a slice of costs that are added to the cost of petroleum as a result of the importation process. There's transport costs. There are lightering costs for vessels, for bigger vessels berthing in Nigerian waters. There are MPA charges. There are all sorts of cost overlays that have been added to the landing cost of petrol as a result of us importing. When you have local production, what happens is that those costs are immediately taken care of. They disappear. So you don't have to put products on large tankers and ship them thousands of kilometers to Nigeria, paying shipping charges. You don't have to pay, demurrage for vessels that are stuck in the waters that cannot discharge. So you could easily see a 20% reduction in current prices as a result of those inefficiencies that are targeted to importation. So look, the truth is that I think that's why I'm telling you that the price is about 1,100, 1,200. If there was no savings that came from local production, that price should be closer to 1,400. I'm given current market prices in the market in the world.
Okay.
So look, the truth is, getting our refineries working means that there is some savings that come into play.
Okay.
And those savings are something that the Nigerians will benefit from.
Yeah, so talking about the refinery now, let's quickly come to that before we wrap up. We see that NNPC is seeking to engage reputable, credible operations and maintenance companies, privately anyway, to actually operate and manage these two refineries. Talking about the Kaduna refinery and the Warri refinery. Do you think anything positive can come from that in terms of benefits and its workability?
Look, seriously, for the past 20 years, there's been a push to get the NNPC to actually privatize these refineries because, the government is not the most efficient person or institution at running anything. Private sector would always run, such organizations better than the public sector. I think that if the NNPC finds reputable and reliable O&M partners for those refineries, I think it's positive for the Nigerian market. It's something that the average Nigerian will benefit from because those refineries will be operating at the best levels of efficiency. However, we have to make sure that we don't fall into the same trap that we fell into with Ajaokuta, where we gave the Ajaokuta, project to private sector in the country. Private sector participants, and all they did was strip those assets of its core assets and sell them off to India and whatever it is. It means that the level of oversight that the NNPC must have over these O&M operators must be such that there is no form of decapitation of the refineries to the detriment of the average Nigerian.
Well, a lot of people are still talking about that and the fact that they are not too sure if that will not equally impact the domestic supply chain for the country if we have foreign players come into this particular sector to handle those refineries. But then let's see what happens. Femi, thank you so much for talking to us. Femi Oladehin, Senior Partner, Argentil Capital Management Limited. It was nice talking to you.
Always a pleasure. Thank you.